Welcome to This Week in Money. I'm Jim Goddard. Today's show will be co-hosted with executive producer Tom Allen. ChartsandMarkets.com chief investment strategist Bob Hoye runs down the major markets for us. He points out base metal miners hit new highs. Oil stocks are near record territory, but the Canadian dollar is not enjoying the usual rise from higher crude prices. Tom talks to the creator of Armstrong Economics, Martin Armstrong, about the Russian-Ukrainian conflict and how sanctions can be a double-edged sword. Martin also talks about how the eat-the-rich attitude never works and the possible separation of Western Canada. Tom also interviews Eric Hadik, the CEO of InsideTrackTrading.com, about how the natural year affects the markets. Have we seen the lows in stocks this year and the outlook for gold? Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO and President Larry Reaugh. I'll talk to Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye, the chief investment strategist for ChartsandMarkets.com. Welcome back to This Week in Money, Bob.
Yeah, Jim, good to be with you. It's been an interesting week in the markets.
Last week, the TSX set a new high. The New York markets had a terrific week. How did we fare this week?
Yeah, well, the New York market recovered on the week, and in Toronto you had new highs there, and it's the tail. Well, let's put it this way: the resource side is very strong. Of course, last month we had the huge discovered short in nickel, which drove the price of nickel, to the moon, kind of thing, and a number of the mining stocks with it, but. Here we are now with, let's just take a look at the one I look at is the XME, which is base metal miners in the States, and we're at new high for those. And then if we move over to the XLE, which is the oil patch stocks in the States, guess what? Testing the highs of a month ago. So you've had, and then GDXJ, they were firming today, but they had their best with the big noise about all the short squeezes in metal prices going on. And I might want to add, Jim, that the short squeeze in metals and base metals was absolutely incredible. And we go back to January with the hit to the market then. We thought, hey, it's bad enough. There's got to be some kind of a recovery, and particularly on the industrial commodity side. So always have in mind that copper can do a rally out to March, which it did do, and it turns out that that was the timing for the most excruciating part of the squeeze in base metals, and particularly for nickel. Then they took a hit and a correction, and then the other part we always keep in mind for copper is that it can do a secondary rally out to around July. So we've been positive for base metal prices out to, May or June, somewhere in there. And then there could be a transition period in July, August, and then there are seasonal items that we look at. I didn't mention lumber, another industrial commodity. It can do a seasonal high in June and then correct down to October. Copper, after its secondary seasonal in July, it can then see weakness into November. And crude didn't work for us last year, but oftentimes if you look at the chart for crude oil, it can have a low in January, February. So, the old saying, sell in May and go away. It's been around for hundreds of years, and it sounds like folklore, but hey, sometimes there's some truth to it. For example, in the great financial bubbles, of which we are in number 6, I mean, this is it. You get a bull market an insane bull market for bonds, insane for stocks, residential real estate, and you get also a rally for commodities with it. But the dominant play has been in financial assets. So if you go back to when London was the financial center of the world, they had seasonal highs in June. So the South Sea bubble peaked in June 1720, and then the other ones following that, they peaked in either May or June. And then the bubble, the stock market dithered around in the summer months, sort of drifting down. Party time was kind of over. And then all of those previous 5 fabulous financial bubbles, they all crashed in the fall. And then if you look up things in history, like there was in northern Italy in 1347, there was the big trading item then were mortgages, property mortgages, and they had a liquidity crisis, and there's an excellent book on it that I have in my bookshelf somewhere. And the author, a scholar, pointed out that while you might have had a couple of years of turmoiled markets, the worst times were in the fall. So let's look at the party now, Jim. Base metals up on schedule. The oil patch stocks up on schedule, and I'm still favoring the gold stocks, and they're up this week as well. So you end up with new highs for the TSE index. I took a look at some of the big banks, and now they're not making new highs. That was a number of weeks ago. So it's been a plus week in the markets, and if you're in the resource stocks, it's plus, plus, plus.
How are the Canadian and U.S. dollars doing?
Well, the Canadian dollar, the interesting thing about that, Jim, is it didn't rally with commodities, and it's known around the world as the commodity. Well, the Australian and the Canadian are the commodity indexes, but the Canadian didn't rally with the latest leg up in commodities. It's unusual. Perhaps political uncertainties in Ottawa. Perhaps the world is beginning to find out that the Trudeau government hates resource industry, and wherever they can, they're stalling or thwarting or trying to shut down either new capacity or pipelines or whatever. So it's been ironical that during the Trudeau government, the Canadian dollar is still referred to as the commodity currency, but maybe it's beginning to recognize that ultimately Trudeau's goal is to shut down all of the resource industries in Canada. And I guess we're all going to go out and become computer programmers.
Yeah, a shame considering I think next to Russia, Canada has the most natural resources.
Well, you've got the huge oil and gas resources in Canada and in the United States, but you've got sort of a peculiar political passions on the eastern side of the continent where Quebec, they want to have their crude oil supplies coming up the pristine waters of the St. Lawrence, rather than covered underground with a extension or a bigger pipeline. I think there's already a pipeline into Montreal. And then you've got the Atlantic provinces with the refining capacity there, and they want to get their crude oil from the pristine waters of the Atlantic. And also, then that same superstition exists down into Maine, where they don't want to have a short pipeline to the coast. So all three areas, Quebec, Atlantic provinces, and Maine, are getting crude oil for their refining capacity including some from Russia. So the money goes into Russia, and then Putin's got money to wage wars on Ukraine, and the taxpayers in North America are paying for it, because it was on Biden's first day of office that he then did the symbolic slam of shutting down the Keystone pipeline and then took measures to thwart oil and gas exploration production in federal lands. And if he had his way, he would shut it down in public land, non-federal lands as well. But then Biden goes and pleads with Iran, a dictatorship, to please provide some oil to the market because the gasoline prices are too high. And then he also goes to Venezuela and urges them. Now, Venezuela has an outstanding oil field, but socialists can't run it. And so, I don't know, last year I read somewhere that even Venezuela was having to import gasoline from somewhere. So here you have Biden going to two impossible countries, Iran and Venezuela, pleading for more oil production while keeping the plug in the United States. And, of course, you've got the double irony of Trudeau trying to put the plug in oil and gas production in Canada. So we live, Jim, in interesting times.
Bob, thank you so much for the wrap-up.
Jim, good to be with you, and anytime.
My guest has been Bob Hoye, the Chief Investment Strategist for ChartsandMarkets.com. Coming up, Martin Armstrong with Tom Allen next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Martin Armstrong is the founder of Armstrong Economics, available online at ArmstrongEconomics.com. He's speaking to us from beautiful, freedom-filled Florida. Marty, welcome back to This Week in Money.
Well, thank you for inviting me.
I have lots of questions in front of me here, so let's get started. First, how are your latest books doing, and where can people buy them?
Well, I think they're available on Amazon and Barnes & Noble, I believe. I think the one's now in its 5th edition. They just keep selling out all the time. So that's the Manipulating the World Economy. So it seems to be getting a lot more attention. And the other one on the cycle of war, which also seems to be getting a lot of attention lately.
Excellent, excellent. Okay, let's jump to Russia-Ukraine, the Russia-Ukraine conflict. Hearing that Ukraine is a stronghold for the deep state operations, along with housing a number of U.S. biolabs, what are you hearing?
Well, I mean, Ukraine has been mainly the subject of being, I would say, a political toy between the West and the East. Most people don't realize what Ukraine is. I mean, people keep saying, Putin's invaded a sovereign nation, etc. Ukraine never was a sovereign nation, all right? It was just a possession of one side or the other. The borders were actually drawn by Khrushchev under the Soviet Union, and he allocated Crimea, to be, monitored by, Kiev. That was basically it. So the problem that emerged with the 2014 revolution was that they overthrew Yanukovych, who was more, I would say, pro-Russian at the time, and he was more from the east. And so he even spoke Ukrainian with an accent. Under his regime, they recognized Russian and Ukrainian as official languages. So when the revolution was against him, then what happened was the eastern part of Ukraine, which is predominantly Russian, they moved also to be independent from Kiev. And so what you have here is that was the Minsk agreement, that they were supposed to be allowed to vote on their own independence, not that they were actually joining Russia directly. Crimea always was Russian. and it was only given to Kiev to allocate. I mean, to minister. The people there are Russian. They weren't Ukrainian. So this has always been a big problem. And the other side of this is that then you have the Belgrade Agreement from 91. And that's when the Soviet Union collapsed. So the agreement was that Ukraine was actually the third largest nuclear power in the world. They had more nukes than China did. So the Belgrade Agreement was that they gave up all their nuclear power, weapons and everything. So in return, NATO promised that they would not move in. And Russia agreed not to move in and that they were to remain neutral. So that was pretty much it. And so this whole thing, with Zelensky and many people that I speak to in Ukraine and Europe, they're really starting to really question this guy. Is he a puppet for somebody else? Because he was elected promising to reduce tensions with Russia and to solve the problem with Donbass, and he's done exactly the opposite. He appeared on TV for the Italian Parliament, and that's when a lot of people started wondering, what is this guy about? What's he doing here? Because he seems to constantly threaten World War III. And so over there, to try and get NATO to come in, and that would be World War III, and he's been told that many times. No fly zone, no troops, knock it off. That's the Belgrade Agreement. And he's been trying to violate that. So the Italian Parliament, he actually made the allegation that Russians were capturing children and torturing them. And it was like, how outrageous can you possibly get? Why would anybody torture children for information for what? Nobody, not even Genghis Khan, has ever done something like that. So it just seems to constantly be escalating, desperately trying to create World War III, and nobody really understands, why, when he should be negotiating to help his own people. So I have friends in Ukraine, and they're beginning to wonder what's he doing? He is sacrificing his own people for what? The whole dispute was let Donbass go, which was in the Minsk agreement, and stay out of NATO. And he's tried to go to do the opposite on both. So it's very hard to say. Other people are suggesting he's just been paid off because there's a huge gas reserve under Crimea, and they want access to that. And so we don't know. We just don't know what the true story is on any of this. And with any war, you have to take whatever both sides say with a grain of salt. I mean, war is also a war of propaganda. So on both sides, they're always going to make the other guy look as bad as they possibly can.
Do you think the risk of World War III is big right now?
Yes. I would say that the biggest problem that we have is the sanctions that Biden has put in on Russia. And people, you can Google it and understand. That's what FDR did against Japan. He put all kinds of sanctions on them, blocked their access to the Panama Canal, put an oil embargo on them, froze all their assets in the United States, and then they attacked Pearl Harbor. And there were even Senate investigations, because the allegation was that FDR was deliberately trying to create World War II because Congress would not authorize getting involved in Europe. So that was one of the things, and there was actually a Senate investigation on all of this. So here we go again, and the danger I see here is that, sanctions are effectively an act of war in the financial markets. And these people don't quite understand all they want to do is wage war. Or, we're all connected financially. You just had the nickel market go completely crazy in London because base metals come from Russia. 30% of the world's wheat supply comes from Russia, Ukraine. So, you've got inflation running crazy, and now all of a sudden, energy, the same thing. We are all connected, and you can't just sever something off like this. And unfortunately, I think we have the worst crop of politicians in the world ever. They just seem to be acting reactionary, don't understand what the implications are of what they're actually doing. And then you have Biden turn around to China and say, well, if you support Russia, we're going to do the same to you. I mean, he has effectively destroyed the world economy. This is not going back. Once they put sanctions in, they never lift them. So you've isolated Russia, and where Nixon spent a lot of effort trying to divide China and Russia, Biden has basically done nothing but brought them together. So, there's just no real coherent strategy of understanding what's going on here. And the sad side of this is that they're creating a inflation based upon shortages, and they have successfully undermined the entire global economy.
Who is Socrates?
Well, Socrates is our computer that I've spent my whole career basically developing, and it's the only fully functioning artificial intelligence system in the world. It's not based upon a neural net. IBM tried that, and that failed. What it does is it is monitoring absolutely every country, every market, every economic statistic around the world, and it comes up with its forecasts. And we had published in 2013 that Ukraine was coming up as the place of where all this stuff was going to start. And here it is. It's been correct, on everything that I can ever imagine. I've tried to defeat it myself, and it doesn't work. Because the world is far more complex than people, I think, really understand, and that we all are connected. So if you just look at what happened to nickel in London because of these sanctions against Russia, we see that there are far more implications here on everything. And, you're looking at, governments in trouble, trying to figure out what to do with all sorts of, various economic theories that are failing. They have an incentive for war right now as the excuse for covering up a lot of other problems.
What's the latest on the Economic Confidence Index?
Well, we have one on specifically Ukraine, and that turned January 6th this year. And ever since then, we've been going into a very interesting time, to say the least. But it's pointing now into the first quarter of 23, and I think you're just going to see a lot more political unrest, geopolitical problems, and the rise in commodities, energy, agriculture. This is the trend into 2024. The difference with this is that we're talking about shortages rather than speculation. So raising interest rates to fight this kind of inflation, it really is irrelevant. You only make the inflation even worse by raising the cost. So I think this is what we have to understand. And this war effort has all simply added to the collapse in the supply chain, which was started by COVID. And that came in right on target with the economic confidence model, which turned in January of 2020. And so from there into 2024, it was forecasting a wave of inflation, and this is where we're at.
what is likely the real rate of inflation, and how tough is it to stop inflation?
Well, the real rate of inflation is much higher than what they're saying, and it all depends upon the various different products, etc. But I mean, I would say most of it in real time. I mean, there are things that are just up 20-25%. Cars, for example, a lot of people that try to buy a new car, the price might be, let's say, $20,000, and they got to pay $22,000 to get it. You have shortages in so many different things going around. So I don't see this as being anything that we can stop or control. It's because, again, it's based upon shortages rather than speculation. So there's no way to stop it. I mean, we've set everything in motion with the COVID restrictions and lockdowns and people not being able to move around. That shut down all the supply chain. And now you throw war on top of it. I mean, this is just, it's a complete nightmare, and I'm not sure we have world leaders that understand any of this.
Do you think the Fed would ramp up interest rates to fight inflation, or do you think they'll keep the rates low and keep on printing?
No. I think the Federal Reserve is going to raise rates because they, unfortunately, will be blamed for the inflation if they don't. That's just the way the politics works. So, despite the fact that they will not work raising interest rates and will only add to it, they still will do so. That's what we're really facing here.
Could interest rates move higher and faster than expected here?
Yes, I think you're going to see them rise fairly aggressively into probably the first quarter of 23 for now.
Does Socrates think inflation will lead to new highs later this year for the Dow?
Eventually, yes. We're looking further out. But what happens is that as tension builds in Europe, then the capital flees Europe and comes over here. Because Europeans realize that there can be tanks running down the streets, etc. So, during World War I and World War II, the capital came in this direction, and you're seeing that again already. So between that, internal capital flows, and you have people shifting money, we're probably going to see a proposal coming out to make the dollar electric or digital, but in that proposal, I think what you're going to see is they're going to try to make the cash basically come from the Treasury, not the Fed, limited to maybe $2,000, and then really it would be a covert way of getting people on the grid. Eventually, all these governments may want to cancel, paper currencies, and that way they get everybody's pound of flesh in taxation.
There's a push on for central bank digital currencies and digital ID. Are these pieces of the puzzle of the New World Order to implement total control over humanity?
Yes. I mean, it's mainly that they've been following the Keynesian economics since World War II. And the real problem here is Europe. They moved to negative interest rates in 2014. They're still negative today. They've been unable to ever stimulate the economy, and now they're trapped and they can't get back. So, eventually, they realize that they're going to default. This is it. They can't even sell bonds anymore. In New York, the top 3 banks will no longer, even accept European sovereign debt as collateral for loans. I mean, that's how bad this has got. So you have to look at this that, their incentive here is that if they do nothing, they're going to basically just default. all the pension funds in Europe are basically insolvent because they're required by law to have anywhere between 70 to 90% government bonds. And then you took the government interest rates to negative. They need 8% to break even. So you've undermined the entire pension system in Europe. And the government defaults, you're not going to get any pensions over there, and you're going to have millions of people storming the parliaments over there with pitchforks. So they know that's the outcome. So that's what, Klaus Schwab is really talking about when he puts out his stuff, saying you'll own nothing and you'll be happy. That's really a sales pitch to make it sound that they're doing something for you. They're going to relieve all your debt, when in fact they're the ones that have to default. We're just in this period where the government structures, the way they have mismanaged the governments for so long, is all coming to roost. I mean, we have the left-wing socialists and Democrats. They don't know how to run for office without trying to bribe the people. Vote for me and I'll give you this, and I'll take it from that guy. I mean, they don't know how to run for office without saying something like that. So it's always, get the rich, and that will solve the problems, but it never does. I mean, they go rob the rich, and does it ever reduce the taxes for anybody else? Never. Those nonsense that they've been using for such a long time to sell anything, it's just coming all to roost. I mean, the Keynesian economics has failed. Lowering interest rates to stimulate the economy. As I said, Europe did that in 2014. They're still negative, and it didn't do anything. It made everything worse. They don't understand the economy. You were told to save money, and you can live off the interest when you retire. Not true. They turned it negative, and then they wiped out all the people who were saving for retirement, all to try and make somebody borrow. I mean, this is the whole theory. It's just collapsing. And this is, unfortunately, the reality of the left wing that doesn't look at anything other than how much can I promise somebody so I can win an election.
Marty, have you met Klaus Schwab?
Yes. Yes, we've shaken hands. I was invited to his grand opening of his film, The Forum, in New York City. I flew up for that a couple years ago. But, I mean, look, we've been on the opposite side of the table for a long time. Some people argue that he just tries to copy us. We started our World Economic Conferences in 1985. He started his World Economic Forum in 1987. Marcus Vetter did a film on me, the forecaster, and he went to Marcus to do a film on him, the Forum. I mean, so we've been, like maybe you call it a tennis match back and forth for a long time.
Online, we're seeing Klaus Schwab referred to as Dr. Evil. Your thoughts?
Well, I think, this is the problem with academics in general. They tend to be very left-wing, idealists, and they are following Marx. And the idea of Marx was basically he doesn't like the economy, and so if we can force it to do what we think it should do, then that would be better. Even Paul Volcker, who was the chairman of the Federal Reserve, wrote there's a book that he put out basically in 1977. He called it Rediscovery of the Business Cycle. And in there he's talked about this Keynesian economics as the new economics that has completely failed. It was supposed to eliminate recessions and depressions and smooth out the economy so we would never have a downturn. And it's completely failed. And that's why he called it the Rediscovery of the Business Cycle. And the Fed chairman before him, Arthur Burns, he put out the very same thing. He said the business cycle wins all the time. So all these theories, and, Schwab is no different. But they call him Dr. Evil because he's this left-wing guy who thinks that the government can control our lives, and if we're all turned into robots or ants, it would be better. And I, disagree, and I don't think it's even possible.
Could food shortages be planned to be part of this evil?
I don't know if it was planned or just sheer stupidity. But the food shortages began with the COVID nonsense, and again, I don't think that they fully understood what they were doing when they were talking about creating lockdowns and stuff of this nature. They were looking at the climate change and reduced CO2 and all this sort of stuff, but that's very nice. But when you do lockdowns and nobody's driving, I mean, how do you get the food supply in or around anywhere? I think one of the senior guys from even Greenpeace came out and called AOC in the United States, Ortiz. He said that she was nuts. How are you going to get food into cities? By a wagon and horse? New York has a food supply of less than 10 days. So this is kind of it gets kind of crazy. But unfortunately, this is what we're looking at. And then the war only makes this even worse. Then on top of that, yes, there is climate change, but the climate change is normal. We go through these normal cycles. They talk about climate change and make it sound like we're always responsible for everything. But, it was the little ice age that bottomed in the late 1600s, and it was getting warm from there on. And they go, oh, it got warm because of the Industrial Revolution. Well, that's not the case. I mean, it's not fossil fuels. I mean, go back and read Cicero. The first Clean Air Act was done by Emperor Justinian in the year 561 AD. They burnt wood back then. Okay, so that still produces CO2, smoke, and it made the air thick and hard to breathe. So they actually put in a Clean Air Act. These issues have been with us for a long time, and it doesn't mean that fossil fuels are not the only thing that produces CO2. Forest fires do, burning wood to stay warm. All these things have been with us for a long time.
Forced and coerced experimental injections are killing and maiming people. If you kill or maim someone with a bullet, you go to jail. If you do it with a syringe, nothing happens. Could we be living through an evil genocide?
Well, I don't know about if they understood what they were doing, or were just looking at, Dumb and Dumber here. But, the thing that I have found from that is that it all depends upon the individual. It does seem to be the younger generation is affected worse. Right next door to me, there was a girl who had COVID, but her husband, they wanted to go to some family reunion, and so they had to get vaccinated to be on a cruise. And the day after she got vaccinated, they took her out of here in an ambulance, and she almost died. And then they go, well, gee, if you had COVID, maybe you shouldn't get vaccinated. I mean, we're not dealing with science here. I mean, if you have the flu, do you then go out and get the vaccine to prevent you from getting the flu? Or if you already had it? I mean, no. So it's hard, this has just been so political. Once the politicians got involved in health, that's it. It's over with, because a politician will never, ever admit that they've made a mistake.
How did the World Economic Forum get so many of their people in places of power all over the world?
That's what Klaus Schwab is all about. He is very good on connections, but he's strategic, and in trying to push his economic theories, he knew in order to do that, he needed people in all these different places. He's, basically got Canada, Europe. The head of the EU was on his board. The head of the IMF is on his board. The head of the European Central Bank is on his board. He's got people, everywhere. what can I say? He's worked very hard over the last 50 years to do it.
The Prime Minister of Canada, Justin Trudeau, and the leader of the NDP are both members of the World Economic Forum, and they've agreed to form a coalition-style government in Canada through 2025. What could this mean for the Canadian dollar compared to the U.S. dollar?
Well, it longer term, it's certainly not very positive. The only thing that helps with Canada is that Europe's in worse shape. But the biggest problem with all of this, these young leaders that have been trained by Schwab, is if you look at them, you look at Trudeau, you look at Australia, you look at New Zealand, everybody that has been one of his young global leaders, including Zelensky in Ukraine, they become very authoritarian. And it's my way or no way. And this has been universal. If you look at everybody that has been associated with him, it's the same agenda. You gotta just push this, and the real belief here is that they call it populism. They're afraid of the people. I put on our site a video clip from the London Financial Times, who was there at Davos in 2016 when Trump was elected. And they report how everybody was severely shaken by Trump's victory because they called it populism. And then suddenly, oh my God, people could actually vote us out of office too. And so it became World War III against, this evil populism. Yet they claim, we support democracy. But as long as they vote in our favor, that's about it.
Could this Trudeau NDP coalition government light a fuse for Western Canada separation?
Yes. I mean, again, you're looking at the unfortunate position of these people, and that is shutting down fossil fuels before they even have a real alternative that can be used. It's really is brain dead. I mean, I can't imagine, anybody with any intelligence would do this. I mean, Germany's put out booklets they hand out to the people, and you can find them online. How to cook without electricity. I mean, they're changing our life. They really believe that, they put a clock up in New York that says you only have 7 years left. I mean, this is absurd, but I mean, this is why they're pushing this agenda so aggressively. And, there's no alternative, energy source to replace everything that we have.
Are Canadians moving to Florida?
Well, I see an awful lot of Canadian cars down here, but mostly from Ontario.
People have most of their wealth in real estate. What does Socrates see ahead for real estate?
Well, there's a risk on the real estate as interest rates go up that people that, mortgages and things of this nature will make it soft. But speaking to the people down here in the real estate industry, the vast majority of houses down here that are selling are for cash. It's quite interesting. But so what we're headed towards a new monetary system, and where they intend to cancel their currencies and all this sort of stuff to try and get us all on the grid to pay, taxes. What happens when you change the currency is relevant. It's like the German hyperinflation. All right. So what makes that transition from one to the next? And that is tangible assets. And that includes, precious metals, but includes real estate. It even includes equities. So you have to understand, I mean, even that they opened up the stock market in Russia and it started to rally. Why? Because people need a place to park money. If you don't trust the banks, you're going to have to go to the private sector. And so you're starting to see that from a lot of different places. You have a lot of cash leaving the government bond markets and moving still into the private sector. If it's real estate, if it's equities, rare coins, rare stamps, art. I mean, some of these first edition comic books are bought like $3 million plus. I mean, it's crazy. But I mean, I'd never spend that for a comic book, but obviously some people do.
Or maybe a non-fungible token, is it the NFTs?
Maybe.
A number of people are calling for a crash in the U.S. dollar, yet the dollar keeps climbing higher. What does Socrates see ahead for the U.S. dollar?
The problem, they keep making that based upon the same theories of quantity, theory of money that the central banks use for raising and lower interest rates. The theory does not work. What they have to understand is that there is a capital flow on a global scale. And as war rises in Europe, the capital comes here to the dollar. I mean, that's what's happened every time. Eventually, the dollar will crash when they're going to replace it. But, we're not at that stage yet. But you have to understand this from a capital flow perspective. And you get all these analysts always so bearish on the dollar, but, the debt, this, that, the other thing. Well, okay, fine, but they don't look outside the country.
How long will commodity prices continue to rise?
It appears to be 2023 may be the highest yearly closing. An intraday high could spark continue into 2024.
What does Socrates see ahead for crude oil, short and long term?
It's basically just showing up at this stage in the game, and when you get really through some important levels, and most of it, I would say, tends to be a sustained major closing above primarily the $100 level in crude oil. Then you're really looking at this thing from a broader perspective, and how it will be held. I mean, so far we've gone up to just over the 130 level, came back down, tested 95. We're moving back up to about the 15 area. So we're getting to the point where we can see a sustainable closing on this. And that's really what is critical for the longer term. I mean, the spike that we have seen up to the 130 level is important from an intraday high perspective. But we have to close really, I would say, above the 105 level at the end of March, in order to say, okay, fine, we're going to probably see even higher prices in the future.
How about for gold? Are we going to see newer highs coming up?
Gold is also it kind of in the same position. The biggest problem with gold has been that its mobility has been attacked. There was a woman, I think, from Canada that went to San Francisco, and she brought $30-some thousand worth of gold with her, and they confiscated it. That's the biggest problem that you have right now. I mean, gold, got up to just over, 2,075, but we have to really look at its sustainability. I mean, we've taken out the high that was made back in 2011, so that's that is a good sign from a broader perspective. I would say that you're looking at here the same thing is really from a longer term view. Gold looks like it's certainly going to move. We got a panic cycle, what we call next year. So high volatility is coming in 2023. And as far as the next real major turning point, we're probably looking off into 2024. But we have, this year has been interesting. it is, 7 years up since that, since the low of 2015. But we have to keep going. We haven't quite taken out the 2020 high just yet, but, on a closing basis, but, we're getting there. So I think, longer term, you're still looking at, higher prices in gold, but probably also more restrictions.
Well, gold hit new highs this year, but silver's nowhere near its old highs. What does Socrates see ahead for silver?
Silver, I think that you're also looking at the prospect of a sustained longer-term bull market in it. We have to say, I would say that if you look at this thing from a yearly perspective, the low of 2020 is important, but we have to really see this thing. In all honesty, we have to get through this. I would say that the $31 area and on a sustained basis to say we're going to start breaking out, but eventually you're looking at the similar scenario where the high is probably not going to be coming in until earliest, I would say 2024, high volatility probably going into the 25 to 26 time period.
Could electric vehicle production be running into shortages of battery metals?
Absolutely. With the biggest problem, the sanctions against Russia, come back and hurt the very idea of creating electric energy.
How can the push for Agenda 2030, the Great Reset, where you will own nothing and be happy, be stopped?
Well, I don't think it's going to succeed. That's Schwab's idea. But you have to understand that Marx succeeded in establishing a communist revolution, mainly because in Russia they had serfdom, which didn't end until 1861, about when slavery ended in the United States. Serfdom ended in Europe around the 14th century. So when that ended in 1861, the people didn't own anything. So saying, hey, let's go get all the aristocrats, they own everything, at least made sense. Today, everybody owns houses or cars or whatever, so Schwab in saying that, I don't see it being well received. You're going to have to give up everything. I don't think that's a good sales point for this particular cyclical wave.
Where can people find out more about your books and Armstrong Economics?
I would suggest just going to our website, armstrongeconomics.com.
Perfect. Marty, I really, really enjoyed this, and hopefully we can have you back real soon.
All right. Take care of yourself. Have a good one up there.
Tom Allen will be back right after this with his interview with Eric Hadik next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Eric Hadik, CEO and President of InsideTrackTrading.com. He's speaking to us from Central California. Eric, welcome back to This Week in Money.
Oh, thanks for having me back, Tom. Glad to be here.
Can you explain what you describe as the natural year and what impact it has on the markets?
Well, the natural year is just a term that I've used. I'm not sure if it's the exact term that others have used with it, but it is something that has really governed agrarian or agricultural-based societies for centuries, for millennia. And it's a year that's a little bit more solar related and viewing the natural year as something that starts along with the vernal equinox on March 20th on our calendar, and that's in the northern hemisphere also, and flows through to the same time during the following year. And again, it applied very much, especially when the commodity markets were in their infancy. Well, almost all of them were agricultural based, so that had some great significance. But I've also seen how it applies to many of the financial markets and just the impact that it has moving forward from that point in time through the rest of the year. And one of the principles or rules that I would explain to clarify that a little bit is with any time frame, whether it be weekly trading, trading within a given month, within a given year, I put a lot of focus on the opening range and where the market moves once it's beyond that opening range. So in the case of this natural year, I define that as the first month of the natural year. And so from March 20th into roughly April 19th, April 20th, which is a date that has its own significance. But you will see that a lot of markets, when they set a range within that first month, the highs and lows of that range become very pivotal support or resistance throughout the rest of the ensuing 11 months of that natural year. And there are key points that you can trade off of as well.
Eric, have we seen the low in stocks?
I do think that, at least on a multi-month basis, that we have seen a low in almost all stocks, most indexes, if not all of them. I've discussed in several of our recent interviews and also in my publications for quite some time, this very uncanny 2-year cycle that has governed the equity market. And I think it's 6 out of the last 7 times on a 2-year basis, we have seen a sharp sell-off in the January-February period and then a low sometime between late February, late March. Most of the time it's more towards that late February time frame. And there were a lot of other cycles that I explained in my publications why I thought right around February 23rd, 24th would mark the low in the majority of stocks. But anytime you have a bottoming phase or a topping phase, the ideal way for the markets to go through that is to be retesting lows and creating divergent lows so that you have your leading stocks and indexes set their final intraday low in late February. Then all the markets rally for a bit, and then they pull back. And in this case, it was on March 8th that the stronger indexes set higher lows, indexes like the Dow Transportation Average, which often leads many turning points, even as some of the weaker indexes, in this go-round, it was the tech stocks and the NASDAQ 100, they set lower lows. And so you start to get that divergence, and then you have another rally, and then a subsequent pullback. This time it was right into mid-month, which is a key time frame within the month to watch for turning points. And several of the stronger stocks and indexes set a successive higher low, even as NASDAQ 100 and some of the key tech stocks set another lower low. So you kind of have this downtrend between the lows in the weakest index and an uptrend between the lows in the stronger indexes. And from that point forward was when I thought we would see our strongest move from March 15th or 16th into April 18th to the 22nd. That particular week is the week I'm watching because it comes into play in a lot of my cycle work on the weekly charts. So I do think that we've seen a multi-month bottom here. I think that we're going to work progressively higher into that just past mid-April. And then from there, we'll probably see some consolidation.
Why do you often refer to the transports as a leading average And what does that mean for the coming months?
Well, the transportation, for whatever reason, the transportation average seems to be one that has its turning points, both highs and lows, before the industrials, before a lot of the other indexes. And so it is often, at the tops, it's often that canary in the coal mine that starts to give you the initial warning sign. And at the bottoms, it has been similar, a leading index where the lows are set, the final lows are set before the other indexes or other stocks, just like I was describing in the contrast between transportation average the last month and the tech stocks. And so that's a key index to watch for some of those early signs, even going back to late last year. It was the transportation average that surged to very significant highs in the beginning of November. And that started the topping process that I was describing that should lead to a sharp January sell-off. And some of the other indexes didn't set their final highs until the first couple days of January. And you saw this succession of divergent highs between early November and early January. And so in many cases, the transportation average is the one that's kind of leading the other indexes, both higher and lower.
Is the Dow likely to see new highs this year?
I think there is still a pretty good chance that we will. As we were coming into this year, actually for all of last year, I kept describing two key cycles that I was focused on in 2022. And the first one was in the very beginning of the year when I thought we would see an initial top, could come as early January because of a succession of 8-month and 16-month, and then it broke down into 4-month and then even 2-month cycles where you were seeing these successive highs. So like last year, some of the leading indexes topped out in early May. Then in early September, 4 months later, some of the other ones hit their final highs. Then, as I was just describing, that peak in early November, 2 months later. So you kind of have this broader, what was a 16-month cycle, breaking down into 8-month and then 4 months, then 2-month increments. And those, particularly the 16 and the 8-month cycle, which have been just uncanny in the stock indexes for many years now, both of them were telling me to look for a high in early January and then another high in the September-October time frame, which is still what I'm looking at, and that could very well be when many of the indexes, many stocks set higher highs, but also put in very significant peaks. And so there's going to be several landmarks along the way that I'm watching for to further validate that possibility and to reinforce that analysis. But at least from some of the weekly and monthly technical indicators that I watch, they're still showing a pretty good chance that at least some of the indexes and stocks will be setting new highs in 2022.
Can you elaborate on what you term range targets in gold and silver?
One of the principles in price movement and technical analysis, and this goes back even to analysts from 100 years ago, observed this, and it's something where markets will move in specific increments, and you often have to kind of observe a market for a little bit to see what that rhythm is, but once they've identified it, once you've identified it, it's often very eerie to watch how closely they adhere to those ranges. And so in the case of gold, I've discussed this the last couple of years, and you can see these ranges and these support and resistance levels that have occurred and arrived at $80 increments. And so if you took a weekly chart of gold over the last 2 years and you just drew a series of horizontal lines at 1680, then 1760, then 1840, 1920, $20, and now, sure enough, we just spiked right up to 2080 with our early March high. You'll see that gold just adheres to those trading ranges. It's like it's a ceiling each time it goes up to one of them, and a floor each time it drops down to one of them. And so the market operates in that kind of rhythm. And so that was when we were going through this rally in gold and silver since late September, early October of last year. The initial upside target in gold was at 1920, but I had included some charts in some of my Inside Track monthly newsletters last year that showed where it should ultimately get up to 20 and then 2080. And so as we were coming into these cycle highs earlier this month, that's exactly where gold surged to. And within days, it was right back down to not only the $20 move, it really only stayed above there enough time to spike up to 2080, but then it dropped right back down to 1920 and has been setting a floor right there. So that type of range trading, and it's also been happening in silver, and I show in several of my recent publications where those ranges are in silver and what they're really portending for the coming weeks and months. But you see it in a lot of markets. I've described it in the wheat market. I've seen it even in the stocks. Last year when the Russell 2000 was coming into an expected peak, also in that early November time frame when the transports topped, they were adhering to just an uncanny, very specific range trading objective that had 2460 as its final upside target. And that was right where the Russell surged up to and where it set its peak and hasn't been back there yet. So you have, like I said, it's kind of like a rhythm built into the market, and once you identify it, it's a very helpful indicator and price level, both for targets and for support or resistance.
Eric, I read your newsletters all the time. It's fascinating how the markets can follow cycles. You have different levels in your subscription for your newsletter. Is there one where if people are interested in finding out more about cycles and following them, that there's kind of a beginning level and sort of a medium or intermediate level, and then, the ultimate level? Can you tell us a little bit about your letter?
Yes. My monthly newsletter, Inside Track, delves into a lot of longer-term cycles, and in that particular publication, it's much more expansive, much broader perspective on a lot of those cycles, where I will talk about geopolitical events. That's where I kept writing about the war cycles that I thought would come back into play starting in late 2021 and stretching all the way through 2025. It's where I've described the discussions on the solar cycle and the impact that has had on markets. And so that newsletter gets into a lot of broader cycles. I also talk about earth disturbances, but also the market. And so that's certainly a good place to get a broader feel for some of these larger cycles. And then as you increase the frequency of updates, so that's my monthly newsletter, that can be subscribed to with or without intra-month updates. The intra-month updates, which on average are at least 3 times a month and sometimes more than that depending on market action, they'll go into a little bit more specific weekly and monthly cycles. The intra-month updates focus just on the markets. I mean, occasionally I'll mention a related external cycle, but they're getting into more of a trade mentality. And then really the premium product, the one that is updated multiple times a week and incorporates a lot of indicators along with the cycles, is the weekly relay. And so that also, there's a lot of kind of educational and tutorial publications that I include with that as well. So that gives readers, subscribers a better understanding and hopefully an education themselves to where they can start applying many of these indicators and cycles to their own trading.
Eric, where do people have to go to sign up for your newsletters?
They can go to our website at InsideTrackTrading.com, and that is spelled with the extra I in the middle of inside, so it's INSIIDE, TrackTrading.com, and you can see a lot of archived articles and reports there. You can even start a bit of an education there as far as cycles just by going through many of the reports that are posted there. But then we have a contact and order page there for subscribing.
Eric, thanks for taking the time out today to be on This Week in Money.
Thanks so much for having me back, Tom.
And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Martin Armstrong, and Eric Hadik. And thank you, Tom Allen, our executive producer, for stepping in this week. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Always good to be on the show, Jim.
Larry, Ontario just announced a $5 billion auto battery plant for their province. Does that help American Manganese?
Oh, definitely. That's our target area, is to joint venture a plant on an existing gigafactory. And, so it's all one-shot deal where we can do the scraps right there, turn it around, give them back the cathode material, the cathode precursor, to actually build new batteries. And you could almost say on a 48-hour basis or whatever it would work out to be. Now, more battery plants in Canada, the better off we are. We certainly have an eye on the U.S. because there's a lot of battery plants going in there. We have a lot of NDAs with companies that are doing that. And, we think that this is an opportune time for the company. Not only is it opportunity for the company, it's opportune for the recycling business. And, we're very proud of our achievements in that regard. We've got we've gotten, close to 100% recoveries and purities in the cathode precursor materials and the lithium. And lithium is separate, of course. That's a separate circuit. But I think we have been on the right track. We made the right decisions very early in the game, and that was to spend our money on R&D. And just to go a little further on that, R&D is not something that you just mix up on the stovetop and taste it at the end of the day, and it tastes fine, and you eat it. It's R&D is hit and miss, and so there's a lot of millions of dollars have to be spent on that. A lot of time. You have to have the right group doing that. And seeing as Cometco was the one that recognized our potential abilities to recycle batteries, they have been actually world beaters when it comes to manganese and to lithium-ion batteries, and so it's a great time for us. The R&D has taken the time, but at the end of the day, it won't seem like it's been forever. We're at least not announcing that we're going to be in production in 2022, 23, or 24 with nothing to back up our claim. And, we've been very transparent about that. So we put all the results out as they come. And, so it's that type of a market, Jim. And I just would like to go a little further and talk about the general market in all regards. And that is that it's a sitting on the fence, watching the stocks type of market that we have. It's got its up days and got its down days, and but a lot of uncertainty around it with the war, Russia, and Russian advancement, and it's certainly and the sanctions that are following up on that have boosted the price of the commodities. You can hardly go through the list of commodities without seeing that they've all increased substantially, especially nickel and lithium and copper and all those other ones have moved right along with it. They're in a bull market, and I see that lasting for some time. It's not just a war; it's inflationary activities of the governments that are overhanging the market. And but I think we're in the right field. We're in a growing industry that wants to grow. We got a lot of support from people that want EV cars. We got a lot of support from people that want to clean up the environment, and that's kind of been our agenda, was to produce something at the end of the day that will not contaminate the environment and will move things forward. So that said and done, some of the stuff that we have on our other projects, like the Rocher de Boule, has a potential for nickel. It also has a potential for rare earths. And, there'll be more news coming on that very shortly. As you know, we have applications in to get a drilling permit, and it looks like that's going to come to a close here pretty quickly. So we can announce that when the time comes. So it's been an exciting time. I mean, who wouldn't want to have their foot in each category? I'll give you an example. The example of the scarcity of manganese in the U.S., the battery recycling process, which will be rolled around the world for us, because that's going to basically be, we've got patents in a lot of countries. A lot are still pending. And it's the company has built a strong portfolio of patents, and we know what to look for if anybody's encroaching on our patents, and it's not hard to see. So it's just another safeguard that we have that we are aware of. I'm not going to go into detail on how we're aware of it, but I can tell you we would be aware of it, and so that's kind of where we're sitting right now, Jim. I'm hoping that we can enjoy the commodity market here very soon through the Rocher de Boule project, and speaking about that, the scarcity of the metals is basically, a lot of it is man-made, except for the stuff that's controlled by China. And, it's policies, it's sanctions, it's wars, it's all kinds of different things that screw you over when you look at the overall market when it comes to rare earths and cathode precursor material. So all I can say is that I'm glad to be back at work, and this week has been very busy, and I'm happy to be able to do the podcast again. My voice may not sound as strong as it used to, but that takes time to get that back into vogue. And it's as far as I can see, it's going to be a great time. I see good markets are coming, especially in the EV field. And you look at the billions of dollars that are being spent on battery manufacturing, gigafactories. That's the second leg of the EV car revolution. First, of course, is the EV cars, then the battery manufacturing, and in the backstretch is the recycling. So you're not reading a lot about recycling at the moment, but that's going to change very quickly. And, we hope to be able to demonstrate to some of our guys that hold NDAs, our process and our results and our material that they get at the end of the day. And so that would be, I'm looking forward to the next few months of actually achievement. And who knows, somebody might step out of the backstretch and say, hey, we want to joint venture that project, or hey, we want to take it over, and they better offer a lot of money. It's not something that would be sold cheaply. I've been asked the question, are we going to, would we sell it off? If somebody wanted to buy it, let's say for a few $100 million, if somebody just wanted to buy the process and move on with what we're doing, that's not in the works because we see this process as being a big money generator coming down the road. So, you have to take that into account. Anyway, Jim, it's a pleasure talking to you, and it's been great. It's the first time I've talked now in a couple of weeks, so I hope that you put up with my voice. It's probably not as enthusiastic as you'd like to hear, but it's hard to get enthusiasm across in your voice when your voice is not as strong as you'd like it to be.
Larry, can you give us a quick thumbnail sketch of American Manganese and how people can get a hold of you?
American Manganese is a critical metals company. We're going to be going for a name change to Recyclical, and Recyclical will be the new name for the company. And this is after the AGM that's coming up in June. So, what can I say? It'll better describe what the company's basic focus is right now. And so I'm looking forward to that. We can take very low grades of manganese and turn them into a profitable situation. And the U.S. has mostly low grades of manganese. We have a foot in the camp of the biggest deposits of those. So, I think that we've got to step up there. And then there's taking that technology, introducing it into cathode materials at the behest of Cometco, and they're right, and they've done all the R&D work to bring it to the point where it is now, and now with this demonstration plant ready to go, who knows? Anybody could step up to the plate. So I've been asked a question. I said I really don't understand. As a CEO of a company, if I saw somebody developing a process like this and did my due diligence on it, I would have been banging on the door a long time ago. But then that's the way I think. And, earlier is cheaper and later is more expensive. But anyway, maybe we're in the more expensive stage. Well, that's not so bad after all. We're a company that's traded on the Vancouver Venture Exchange under the symbol AMY. We're traded in the U.S. QB exchange under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can go to our website at AmericanManganeseInc.com and get all the updates. Our transparency is obvious, and see that we haven't tried to hide under a bushel, and we haven't screwed around with our financials to make us look better. But anyway, that's we decided not to go into the black mass until we're ready to actually use our metallurgical process. Black mass is a path that leads you down to losing money, and you need that metallurgical process at the end of the day to make it viable. So, and we've worked on both black mass and the scrap material. So we're pretty confident that the demonstration plant will prove those abilities out and on a continuous basis. And you can reach the company at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on March 25th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.